The first part of the tax return is mainly concerned with, I should say, by the way, about 5 to 10, at 10 o'clock, we'll take a short break, and then Gary will take over from 10 till 10:30. And then the last half hour will be questions and answers from, and in the meantime, you can put as many questions as you want into the chat, and we'll get to them in the final half an hour. So the first part of the return is really to do with what's called personal details. And these personal details are really about revenue finding out what's your marital status. You know, are you single, married, widowed, etc. And the reason that's important is because that will determine what basis you are on, you know, what's your rate bands and what tax credits you get. Because, for example, if you're a single person child carer, well, then you get a larger personal tax credit there. They also want to know details of your spouse or civil partner. I use the word spouse, but you can read civil partner into that as well. Your date of birth, and they want to know if you're caught by the high earner restriction. Well, the return will automatically find that out, and that essentially applies if your income is greater than 125,000. Well, then the maximum allowances you can claim are the greater of 20% of your income, or 80,000 euro. So also it's important, they want to know, are you permanently incapacitated? And the reason that's important is because you can potentially get a refund of DIRT, deposit interest retention tax. They want to know, are you a proprietary director? And the reason that's important is because if you're a proprietary director, well, then you'll pay Class S PRSI rather than the other classes of PRSI. Now, on the Tax World members area, we've been asked lots of times what exactly is a proprietary director. And essentially it's somebody with more than 15% control. But you know, if there's any doubt as to whether or not somebody is a proprietary director, particularly in relation to spouses, etc., well, then the issue then gets decided by what's called scope section in the Department of Social Protection. Another important detail on the personal details is whether or not you're a medical card holder. And the reason that's important is because when your tax is being calculated, it will give you a different rate of USC, a maximum rate of 2%. And then the other issue is whether you're entitled to PRSI exemption. Now, PRSI exemption will apply if you're less than earn less than 5,000 euro, if you're under 16, or if you're over 66, or also if you're non-resident. Now, another issue that's important is the your residence and domicile status, and that's obviously very important because if you're not resident in Ireland, then you won't pay any Irish tax. If you're non-Irish domiciled, then you will only be subject to tax on income from abroad to the extent that you bring it into Ireland, or indeed capital gains from abroad to the extent that you bring it into Ireland. Domicile, as we know, is different from residence. Domicile is essentially the country where your father was born, or where you were when your father was born. And you, for example, a French person living in Ireland would retain their French domicile. So, and then we move on then to look at, if you are non-resident, you will get a proportion of credits based on, if you're resident in the EU, you'll get a proportion of your tax credits. And lastly here, a non-resident couple. If you're a non-resident couple, you are entitled, you may be entitled to the aggregation basis. When I say a non-resident couple, one of the couple is non-resident. So, for example, you could have a Polish person working in Ireland who would be resident in Ireland, and then the wife or partner might be living in, or spouse might be living in Poland, and then, you know, the question is, do they get the full married rate band or full married allowances and credits? And that's done on what's called the aggregation basis, and you have to apply to revenue for that. And lastly, in relation to mandatory disclosure. Mandatory disclosure is a system where revenue require you to disclose if you have been involved in a tax avoidance scheme. And if you have been involved in such a scheme, then you have to declare it, formally declare it on the tax return. Now, all of these points are covered in great detail in the tax guide, the guide to completing the tax returns, which is available in the chat and also is available for download from taxworld.ie. It's a PDF of over 100 pages.